Awesome. I think it's time to kick this thing off. So welcome everyone. Glad you could join us today for our 1 hour webinar, More Than the Hype, using virtual cards to expand invoice payment options. I'm Sam Maxwell, part of the marketing team here at MHC, and I'll be facilitating today's discussion. With us is our speaker, Lynn Larson, who I'll be introducing shortly. First, I'd like to go over quickly just several housekeeping items for you all. This webinar is being recorded and attendees will receive a follow-up email with the link to the recording on our website. All participants are muted to prevent background noise, so please type in any questions or concerns you may have during the presentation into the Q&A section. There will also be a post-webinar survey that will appear when the webinar ends. Please use this survey to let us know how we're doing and to request any additional information, so an MHC resource will be able to follow up with you. We really appreciate all that feedback. Awesome. Next slide, please. Great. I think there's a couple more transitions there. Perfect. So one more item before I hand off the presentation to our speaker today. For those of you not familiar with MHC, we help organizations tackle digital transformation with speed and confidence using our solutions to automate the capture, transformation, and communication of paper and digital documents across core business processes. Our flexible end-to-end automation platform helps users eliminate tedious procure-to-pay and order-to-cash tasks, increase efficiency, achieve operational excellence goals, and strengthen relationships with customers and vendors. Awesome. Next slide. Great. And now I'll be introducing Lynn. I believe there's a next slide, quick little bio. Awesome. So a little about our speaker today, Lynn Larson. She's a certified purchasing card professional since June of 2007. She has over 20 years of card and payment experience and has launched Recharge Education in 2014, which has training, consulting, and customized resources, and also provides free educational blogs and other online content. And right there is the link to the website. So definitely give that a check out for all your virtual card and payment needs. Awesome. Lynn, I will be passing it over to you.
Great. Thanks, Sam. Well, welcome everyone. And just to add a little bit more to my bio, so you know what my background is. Back in the day, I had managed card programs, and so I'm very familiar, and perhaps some of you are in that same boat. So I've been on your side of things too. So I can also, share my perspectives from being an end user or a buying organization at one point in my career. So today, obviously, the topic is on virtual cards. And last fall, I had partnered with MHC to deliver a webinar that spanned a variety of different payment options. But today, of course, the focus will be on virtual cards. So before we get too deep into anything, I do want to start out with the poll, and Sam is ready for that. We want to look at what your experience is regarding virtual cards, and that can help me better tailor my message today. I realize we probably have a diverse experience on this webinar today. I certainly don't want to make anything too basic or too complex for that matter, but we really intended for this session to be introductory in case some of you are not aware of what virtual cards are all about, but then we'll dive a little bit deeper as well. So Sam, do you want to share the results of that whenever you feel it's time?
Yes, results are now shared.
Okay, so it is that diverse audience that I thought. All right. Well, for those of you that already have an extensive knowledge, I would love if you put things in the question box or in the chat, maybe just some of your own experiences with virtual cards. And then maybe Sam, at the end, if we have time, we can, share some of those as well. I love getting input from other people. I think everyone's got a lot to contribute here. So, all right, we're going to go on from here then. We're just going to get going. What are virtual cards? Here is my visual. When you think about the world of commercial cards, the umbrella term for all sorts of different card solutions. As shown here, you've got the primary ones. Most people are familiar with travel cards, corporate travel cards, You might also be familiar with purchasing cards, also known as P cards or Pro cards. You got fleet cards as a primary type. And then you get into that electronic payables category, or some people call it e-payables, or you also hear it referred to as electronic accounts payable, EAP. That's where virtual cards come into play. So you can see here that virtual cards are one of those options, and then the other one being straight through payments. So we're going to be going through, well, obviously virtual cards, but just to give you a better idea, straight through payments is similar, except when it comes to those types, those act more like an ACH, but the payments ride the card rails as they're known. Maybe you've heard that term before. You've got like ACH rails. Well, nowadays you also have instant payment rails. That's something else. And then you've got card rails. So straight through payments don't require suppliers to process a charge transaction to an account number. The payments happen more or less automatically to get into those suppliers' bank accounts. But we're going to look at virtual cards in particular. And in case you're wondering, how do they differ from, say, purchasing cards? Because both are used to pay for goods and services. That's exactly what we're going to take a look at and get into. So let's just start out right here. Virtual cards, why were they created to begin with? Well, they've been around since the early part of my career, actually. And they were designed, after the traditional cards like travel cards, purchasing cards, because they capture usually a different bucket of spend. So what do I mean by that? Well, virtual cards are designed to work within a traditional purchase to pay process. You might be hearing that called P2P process or procure to pay. Some even call it a source to settle. So all different acronyms. And of course, that's the beauty of our industry. You hear multiple terms for the same thing. And sometimes when you are talking with others, you might be using one term in a certain way. They might use the exact same term, but have something different in mind. So I do encourage everyone, when you start getting into discussions, whether internally within your organizations or if you're working with a vendor, provider, or clients, once you start talking about these things, make sure you are both talking about the same thing. Okay, so virtual cards, again, they're designed to really work with a traditional AP, accounts payable process. And if you look at those high-level steps there of a traditional P2P, you oftentimes have an internal requisition for something, followed by the creation of a purchase order, a PO. Those goods or a service is performed, so that all happens. There's the receipt part. Then the supplier is sending an invoice that has some sort of approval process within the buying organization. And then you've got, that most important stuff that we're focused on today, the payment of the invoice by accounts payable. Now, in a moment, I'll contrast how that is different from purchasing cards, but you got the idea. And if you work in this area at all, these 5 steps are very, very familiar to you. But now when it comes to virtual cards, just again, to further sort of separate and tease out what I'm talking about, there is a version that is issued to individuals. So that bottom box there on the screen, and that's becoming more popular, especially, when the pandemic hit and so many employees were working from home, working remotely. There needed to be a way, to give them an easy way to purchase what they needed. So there is a method by which virtual cards can be issued to an employee's, it makes its way into the mobile wallet. It offers a variety of controls as noted. So that's not what we're talking about today. We are focused on the type of virtual cards that are used for invoice payments. And even within this little bucket, there are a couple different versions. So if you look there to the right, you've got the version where as you're paying your invoices, the supplier might be getting a different one-time account number for each invoice, or maybe you're paying a batch of invoices, collectively, but they're getting a different account number to charge every time. You might also have heard of this being called a single use account, or SUA. We're so full of acronyms here in this industry. So they might get, a different one each time, and they're charging that for the designated invoices, or maybe just one invoice. Now, conversely, there is another version, not as popular, but I bring it up in case you run into it at all, where the supplier might retain just the same account number, but that's different than just retaining, like what we know in our consumer world, when you allow a supplier or merchant to, store your account information. The difference being that when a supplier is retaining an account number on file, there's no value, there's no limit available until you, the end user, the buying organization, does that whole approval process of the invoice, and then kicks off the payment process where the supplier is getting notification to charge the account. So they can't just randomly put charges on the account, because it won't work until the limit is loaded, so to speak, and then it's available to them. So those two different types. Most organizations, though, are using that one-time use or single-use account when they are using virtual cards to pay for invoices. So let's just keep going here. Oh, there we go. We got the little asterisk. I forgot I put that in there. All right. So how do virtual cards differ from P cards? Well, when you talk about who is managing this program within an organization, usually that would be the accounts payable department. After all, again, they're the ones paying invoices. So virtual cards tend to be managed by AP. Now, when it comes to P cards, purchasing cards, it might be AP. Oftentimes you hear that program being managed by a procurement function, could even be a shared service function. It really differs. So that's one difference there. And then we just went over what the traditional P2P, procure to pay process is. We've said that virtual cards are ideal for that. And in the P card column there, you'll see I put, well, not ideally. Certainly there are organizations that will get invoices in from suppliers, and they'll say, oh, we want to pay this one with a P card. So someone in accounts payable who's holding a plastic card might call up that supplier and say, hey, we want to pay invoice ABCD with my P card. And then they give the information over the phone, or maybe it's done through an online portal of some sort. But that isn't ideal. And I say that because P cards, even though they're also used to pay for goods and services, generally speaking, they are used for the small dollar stuff, that doesn't make sense to run through accounts payable. When you start doing, this whole process, P2P process, a lot of times the invoice or the expense is so small, it just is not cost effective for the organization. So P cards, when you give them to employees, allow those payments to just stay outside of the AP realm. It's not really efficient for you or the supplier if you inevitably call the supplier, or maybe email them even and say, hey, I want to pay it with the P card. So it's just that process should be different. Virtual cards are ideal for what we're talking about here, AP invoices. I've already mentioned how they're both used for similar types of expenses. And in both cases, the buying organization, is liable to pay the provider of the cards in full every month. And also, some organizations pay their card issuer more than once a month for different reasons, but at a minimum, once a month is required. So you can see there are some similarities, but the differences really start to emerge here on this screen. We are looking at, is there a plastic card or not? Well, you can tell already that when we're talking virtual cards, there really isn't plastic. And there doesn't even have to be plastic, as we've already said, when you have P cards issued, because those can be virtual, they can be something other than plastic. But that is a key difference, because usually you do have plastic with those individual cards. And then the monthly spend limit. So when you have a virtual card, and maybe you picked up on this already, but it's not like here's this virtual card and it has a $3,000 limit for the month, and then you can use it to pay one invoice or multiple invoices. That's more of the traditional type of card. So Most P cards, I know I say yes there, but it could also say usually has a monthly spend limit. Like our consumer cards, we've got a limit. Virtual cards don't have that. Again, once your organization approves of an invoice or batch of invoices, then whatever the dollar total is what is assigned to that virtual card, so the supplier can charge it and get those invoices taken care of. So that's where there's a big difference. And then, as I've already mentioned, these virtual card accounts aren't usable, aren't available for a supplier to charge until you have done that approval process, you've initiated the payment, the supplier has gotten notification to charge the card. So from that standpoint, it's not like they can process duplicate charges like we can see on P cards, just like we can on our own consumer, our personal cards. And then, continuing on this path, then I'm sure you're figuring out, no, the supplier can't just charge a virtual card anytime they want. In fact, related to that last line item there in the table, with a virtual card, once it is provided to a supplier, there is usually a very short window of time when they can charge that account for the designated invoices. So sometimes maybe it's a 2-week expiration, maybe it's a few weeks, a month. All of those finer details are things that the end user, the buying organization can work out with its provider. But with the P card, pretty much as long as there's enough limit left, the supplier can be charging it at any point. They might do it too early before they even provide the goods and services ordered. They might be doing it so late, and that's actually something we're going to get into more on the virtual card side of things. When I mentioned that short expiration window, you can run into a few hiccups there related to that, but we'll get there here in a minute. And so then, as you're already figuring out, I'm sure, as we're just talking about how these two different card products work, there isn't like a multi-year expiration, with virtual cards. I've already explained that, but you do with a P card, usually carry around a card that might be expiring a few years out. So these are the distinct differences. Virtual cards, perhaps you're starting to go, oh, well, a supplier, can't just charge it when they want. They can't do duplicates. It's so secure and it's so tight and tied in to the invoices that your organization is approving, that it just makes it for a really slick product. They just can't do whatever they want. They the supplier. So you've got a nice secure product that is well controlled through these kind of built-in mechanisms. So let's keep going. Oh yeah, Sam, let's do this second poll here, because now I'm curious, what is your organization's experience regarding virtual cards? And I am guessing we're going to have a mix of answers, but you never know. I like to see what people are saying here. And certainly maybe you're even on the provider side of the world where you're not necessarily using virtual cards. Maybe you're selling virtual cards as a solution. So Sam, whenever you think we need to shut that down, I'm curious. Okay.
Shared.
Are you sharing them? Okay, all right. So we have a mix here. Some are already broadly using. See, again, I would love to hear from those of you with extensive experience, or you're broadly using the cards. Maybe you're looking for tips, or you're trying to double check to see whether you're following all the best practices I'm going to get into. And some are not using them at all. And okay, all right, thanks, Sam. I'm gonna close this down and move over, but it's good to know. We've got quite a range here. And it's funny, even though they've been around for more than 20 years, I mean, certainly there are so many organizations that haven't even thought about virtual cards. They haven't, really explored it all. And then, some have just been doing great things with them for years and years. So it's so interesting. I mean, we know payments in general are just an interesting field to get into. All right, so now, we've talked about how they work, but why do you want to use them? Although we've talked a little bit about that as well. But what are some of the specific benefits that you can take to your managers if you're trying to convince them, or to your peers, whomever that may be? So if you think about it, we've talked about how they really fit in with that invoice process, that whole, you don't need a requisition and purchase order, but, that can be part of it too. But certainly when you get those invoices from suppliers, so it works well with that. The beauty of it compared to ACH is that suppliers don't have to provide their bank account info. So that's safer for you if you are the buying organization. You don't have to have all the controls that are so necessary when you are holding suppliers' bank account info. And by the way, I mean, ACH is also a great payment mechanism. It's electronic, option, but, in my mind, the more expansive or diverse you can have your payment toolkit, the better off you are, because every organization has such different goals when it comes to their AP process and related things like days payable, outstanding, and just some of the payment terms that we're going to get into. So I don't want to knock ACH by any means, because it's a great payment method, just different. So I'm keeping that in mind. I am, however, going to bash checks a little bit by constantly reminding you that the inefficiencies related to checks, although you probably have already got that well documented in your organizations. So on that note about controlling the payment timing and picking up some benefits, you get that potential float. Again, you're only making at a minimum one payment each month to the virtual card provider, instead of all those individual payments to different suppliers. And so in many cases, you're picking up float, whether it is 10 days, 15, 20, once a cycle cuts off in your virtual card, monthly cycle, so you can pick up that float and, better manage your working capital. Sometimes you hear that phrase thrown about, how can you better manage it, manage the timing of your payments, extend those payments, again, goes back to the goals of your organization. I mentioned how virtual cards work. That really means I shouldn't say no fraud, because I suppose anything's possible, but I personally have never heard of a fraud case on a virtual card for this very reason: how they work, how a number is assigned to a supplier, how the value of the card, so to speak, is so locked down and tied to an invoice or invoices. So you've got great controls there, great protection there. And then many of you might have heard about the possible potential to earn a revenue share, also known as rebate. Now, this isn't a guarantee. I often get people saying, oh, okay, great, I'm going to pick up this great rebate. And, they'll say, well, how much is it? And all of those factors are so dependent on the relationship that you have with the virtual card provider. And it's driven by different aspects, such as your organization's credit history, how much you are actually using the virtual card products, so what your spend is, things like that. And it's not a guarantee, but it certainly is something that is out there, and it needs to be a conversation piece when you're talking with providers as you look to explore or adopt virtual cards. And then another benefit that I think doesn't get enough press would be that relief from 1099 reporting, federal 1099 reporting for domestic payments. Of course, the IRS rules and revenue codes are always subject to change, but for now, that's another way to really take some burden off of accounts payable, because when it comes time, January in particular, February, they're so busy dealing with 1099 statements and things, but virtual cards, give you some relief from that, because those payments are reported through the suppliers, merchant acquirers. It's kind of like the suppliers banks are handling that. So all the more reason to really consider, using or, adding virtual cards to your mix and figuring out where does it make the most sense, depending on your needs as well as that of your suppliers. So we'll keep going right into that. So as I've been mentioning suppliers. That, I say, would be maybe the biggest challenge to overcome. They might be reluctant to accept virtual cards, or they just don't have enough knowledge to accept them. So I call this my cheesy photo number one, which means there's more cheesy photos ahead. But you've got that supplier reluctance there. And so, the way to overcome it, one, I guess, some suppliers have been accepting virtual cards for quite some time, and they're very familiar. Others, if you have to provide an education, you need to relay, what's in it for them, and there needs to be something in it for them. It's not going to go over well if you ask a supplier to accept a virtual card for which there is a cost of acceptance, just like the suppliers have with other types of cards. There's still an acceptance cost. If you're going to wait and pay them, 45 days after an invoice, after the due date or after the issue date, rather, there's just not much in it for them. If they have to wait that long to get paid, and then they're also paying a price to accept your payment, they're just going to be very hesitant, unless you definitely have a strong hold in the relationship, if you're a powerful customer and they're a smaller supplier. But for this all to work well, there has to be some benefits to the supplier. So let's, get into this a little bit more. What can you do? What are some other, best practices? Well, when you're first talking to a supplier, I thought this cartoon kind of nails what happens so much of the time. He didn't even remember signing up for the taste test. The lesson here is that you need to connect with the right person within the supplier's organization. I have heard from many, many different end users who say, we started to work with our sales rep, at the supplier organization. He or she said, sure, we'll take your virtual cards. And then when it came right down to it, that salesperson didn't have the authority, and maybe they didn't even have, the specific knowledge necessary. And so, the relationship or the whole virtual card process kind of falls apart. So you need to make sure that you are connecting with the person who will be using the system, and that understands, that there is an acceptance cost, but also understands the offsetting benefits. So lesson number one, make sure you get to the right person. And it could be a controller, it could be an accounts receivable manager, finance manager, someone on the supplier side. All right, so what are some other just best practices to get over this, potential hurdle or this gap in terms of their reluctance? Well, we've got the payment terms. I've already indicated that, well, let me get to the payment timing in a minute. But as you're working with suppliers, you do want to make sure you are documenting, maybe that means updating a contract if you have one with the supplier, as far as what will the terms be, what might the purchase to pay process look like, if it changes at all based on what you've been doing in the past. But then accounts payable, AP, needs to be aware as well. They need to be updating their respective systems. Maybe it's the master vendor file. Maybe it's an ERP system. Wherever you are noting or recording, programming, the payment method that a particular supplier accepts or should be paid via, then you need to have all those systems in place. If you've got it marked in a system that you're paying a supplier ACH, yet over here you've decided on virtual cards and that system never gets updated, chances are the virtual card payments won't even happen because your system's going to default to ACH. So you need to get the stage set internally as well as in that documentation with suppliers. So now getting into don't keep paying them another way. I just mentioned that. But even if you update your systems, someone in accounts payable might say, oh, well, that supplier just asked me for a check. Okay, I know our system says virtual cards, but let's just do the old check because that's what they want. And that happens too, unfortunately. So maybe that should be another bullet point here, but that's more of an internal thing where you do want to be educating all of your accounts payable staff on the benefits of virtual cards and why you are using them and why it's so important to, pay suppliers as intended, based on what your system contract shows. So don't keep paying another way. Otherwise things just won't, the virtual card program won't get going and pick up steam. Now we're down to payment timing. So I was already alluding to the fact that you don't want to just sit on an invoice and use a virtual card payment 45 days later. I mean, there has to be a quick payment benefit for the supplier. And certainly in this day and age, with all the economic uncertainty, you've got many suppliers, or I have to imagine you do, who are really looking for fast payments. They want to get things taken care of quickly. They don't want to wait 30 days, 45 days. And so when I say pay them quickly, I don't mean, okay, let's push out your check payment terms to 45 days and then make, the virtual cards 30 days or even 20 days. Again, I've had other end user organizations attest to me that as soon as they moved virtual card payments to more of a within 10-day scenario, they had far greater success with their virtual card program. Again, you might be paying the suppliers very early, let's just call it day 10, but you're only having to pay your virtual card provider on a monthly basis. And there's typically, a float associated with that. You, as the buyer, can still pick up a lot of benefit, along with all the other benefits that I showed on the other slide. So do pay suppliers very quickly, and maybe that's a good way to start out. If you have suppliers that are asking for payments to be expedited, start talking to them about a virtual card payment so they can get their money faster. Some organizations even make it a pay on invoice receipt. So they don't even wait for that whole invoice approval process that is so inherent in a traditional P2P. They just say the invoice comes in, often through some sort of invoice automation, system solution, and then the virtual card payment gets kicked off. So again, and when I'm talking about virtual cards, I should have even said this at the beginning. Whether you're using Invoice or AP automation or not, these solutions, virtual card solutions, are still available to you. So it's not dependent on certain technology or a certain process, although you do want to make sure that it will work within what you're doing today, or you need to see what kind of changes are necessary so you can take full advantage. Okay, and then we've got that training aspect. I alluded to a moment ago about suppliers not always being familiar with how virtual cards work. How will they get the account number? How will they know when it's time to charge it? How do they charge it? These are some of the things that you want to offer up training on. Now, if you had participated in the April webinar that MHC did with Mary Schaefer of AP Now, she kept stressing the fact that you don't want to make things difficult on suppliers. She was referring to AP automation, but the same thing goes with virtual cards. And that can be a challenge if the supplier does not have an automated way to handle virtual card payments, to process virtual card payments. It becomes so manual for them that there are suppliers who have said, hey, I've had to hire more accounts receivable staff to accommodate our customers' virtual card desires. And that's not what you want. Obviously, that doesn't enhance your relationship at all. So you do want to encourage them to explore automated solutions, and there are some out there. And you do want to train them on how this works. And then, related to that too, be very proactive on the whole expiration date aspect. So part of the training would be, hey, supplier, our virtual cards are going to be set up to expire 2 weeks after they're initiated to you. So you need to make sure you are, processing the transactions within that 2-week window. And I've had end users say some of the greatest things they have done related to preventing declines is, taking advantage of the reports offered through their virtual card provider that show which virtual cards have been issued to suppliers, but the suppliers have not yet charged them. Some reports might even say, hey, they've got like 2 days left before that virtual card expires. And so I've had end users say, well, we've just got someone in our accounts payable staff that will reach out to the supplier to remind them about that card's upcoming expiration. Now, if this sounds tedious to you, they say it takes hardly any time at all. It's a simple note, and it's a lot easier to do that than deal with decline, after the fact, which is frustrating to the suppliers, as well as taking up your time as an AP staffer or buying organization. So just keep all of these elements in mind as you work with suppliers, enhancing that relationship, making them satisfied to accept card payments, will go a long way toward growing your program, if that's a goal within your organization. All right, here's my cheesy photo number 2. I mentioned taking advantage of the providers, virtual card providers reporting tools. And I can't say enough about that. I think some organizations get going with virtual cards and they forget that they've got different reporting options available to them, like the one I mentioned about seeing which virtual cards are coming up for expiration or about to expire. But not only that, many virtual card providers will provide assistance with onboarding suppliers to the virtual card acceptance. Now, a word about that. Every supplier, buyer relationship is unique. I know some suppliers, if they're just blind called by a card provider, they're not going to react very well. So, think about who your suppliers are, who's, key to that relationship. It's always good to be part of the discussions if you can. So if your virtual card provider is trying to help you with the onboarding, take part in that, make the introduction. Don't just let the virtual card provider contact your supplier, separately, because generally that doesn't work. It could, but it's not always the best way to go. But do say what kind of help can they provide? Do they have instruction manuals that you can pass on to your suppliers? What kind of training do they make available to you as the user of virtual cards? So there are a lot of different things that they might be willing to do. You just need to ask. So partner with them, take advantage of what they make available for your side of things, the buying side. All right, Sam, we got poll number 3 now, because we've been talking about suppliers. Have they expressed interest? So I'll let this take place here and we'll see what people say. I'm waiting for someone to say yes, a bunch of them, several. Okay. Well, you can close that down when you.
Great, sharing results now.
Okay. Well, you can see that it looks like there's been some maybe limited requests from suppliers. I'm not surprised. I mean, just based on those hurdles, I was describing. And again, I think, suppliers might get more excited about it. Maybe they still aren't expressing interest, unsolicited interest, but I think they just are more satisfied if you're able to, increase the speed of payment to them, if you're able to connect them with a more automated way to accept virtual cards. So, if they're resistant, do find out what are their specific concerns. And, maybe they don't have a good merchant acquirer, the entity that they work with on card acceptance. They might not have a good partner related to B2B, business to business card acceptance. And that right there can make things more difficult for the supplier. So find out what their challenges might be. And then maybe your virtual card provider, can help steer you so you can steer the suppliers to ways of remedying that or easing, whatever burdens that they're concerned about. Okay, so now we are moving into the exciting aspect of accounting. I've had AP organizations, departments say, all right, we get virtual cards. Yep, sounds great. Looks like it can be a good option for our toolkit, but how do we handle it from AP operations? So that's what we're going to get into. And I'm assuming we've got some AP people in the audience. First, here, I call this my writing on the wall, literally, where I just have to stress that as I talk about these accounting things, I mean, I realize that every organization is different, has its own accounting rules. And so I'm just providing some general information, but please do obviously consult internally with your experts. So this is for educational purposes. I know there are variances. Okay, enough said. AP stage of the process. So earlier we looked at what are the main steps related to the P2P, purchase to pay. Well, now let's look more closely at what does accounts payable AP do. Once that supplier sends an invoice, however they send it, whether it's through automation or an email, whatever, snail mail, that invoice is received by AP, it gets logged into the applicable system. Maybe the supplier needs to get set up in a master vendor file, who knows? It gets forwarded for approval. Again, that could be through technology. And then we're at the point where the invoice gets approved and AP is getting ready to pay it. Okay, this is great. Well, then you've got AP that might be doing what's known as a three-way match, where they're matching that invoice to the purchase order and a receiving document of some sort. Although not every organization does the three-way match, there's different iterations of that. But we're most interested in getting down to these other steps here. The invoice gets scheduled for payment. When it gets released, now we're thinking broadly, not just virtual cards here, but when that invoice gets, or the payment gets released, your systems end up producing a check file, where you might be then printing the paper checks right there in-house, or maybe it's a file that's going to your bank and they're handling check payments for you. Then you might have an ACH file. Sometimes these are all one big file and there's just a different designation for what the payment should be. But if we just look at it separately for a moment, so you've got the checks going and doing their check thing, you've got ACH. Well, then there's a payables file. Think back to that term I used at the beginning, e-payables, virtual card. That file gets potentially, sent off to your virtual card provider. Again, you might have a slightly different process, depending on your technology, but that's all it is. So when AP is all concerned, like how does this work? If they only had the check file and ACH file previously, this is just one additional thing to put into that fruit basket or whatever you want to call it. So it's just yet another payment method. So then when it comes time to the entries that are associated with this, well, that payment being sent, when it comes to virtual cards, you're not literally sending money at this point. You are sending the virtual card, or kicking off the process where the supplier is getting notified to charge a specific virtual card account number. So they're getting paid, or they will get paid within a day or two. But within your records or within your books as the buying organization, you can note that the invoice is paid, and then it just becomes an open payable, like other invoices open to be paid, becomes an open payable until you need to pay your virtual card issuer. And so there's some things you should do, namely try to keep that separate as a separate accounts payable account, separate from any purchasing card payable accounts you may have, separate from just your big, normal regular AP account payable. You do want to keep virtual cards separate, because after you pay the virtual card provider, chances are there will be a balance left in that virtual card VC payable account. Well, what do you mean? Well, if you have sent off, let's just say $50,000, different virtual card, payments to suppliers, in a perfect world, the virtual card provider gives you that monthly bill, and it's for $50,000. Well, lo and behold, then everything's, is zeroed out. But we know that doesn't always work that way. It's not a perfect world. And so chances are you might pay the virtual card provider whenever that payment's due. Again, you're picking up some float most likely, and you might still have 10,000 left. Well, why is that? This slide gets into why that can happen. It could be that the supplier hasn't even tried to charge the card yet. And that's where that expiration window can come into play. And so you do want to follow up on what happened. Is it because they haven't even tried yet? or did they try and get a decline for some reason? So, you need to keep on top of that. But another reason just could be a timing factor. That could be that the virtual card cycle closed and then the charge posted a day after. And so, a best practice would be someone needs to be monitoring this virtual card payable account. And after each time you've paid the virtual card provider, whether the payment is monthly or more, someone needs to see what is the balance left in that account and why. And to get to the why, that's again where you want to make use of any reporting tools available to you. So you'll, again, have things that might show declines that have happened, or, maybe again, supplier didn't charge it yet. So that's just a best practice in managing this. Much like, it's a whole reconciliation type of thing, much like every organization does or should be doing today related to check payments, have the checks cleared, ACH payments, were there any, problems with those. So just, setting up that structure in advance can certainly help, eliminate future pain as you start to manage, get a different payment method as part of your mix. So this brings me to these best practices. I mentioned establishing a separate payable account, because then it's much easier to see what something pertains to. It's not all mixed together with open checks that haven't been cashed, things like that. I mentioned monitoring that balance. It could even be just a daily thing. I mean, just looking at accounts regularly, daily bank reconciliations are our best practice. So, make sure someone is assigned that responsibility. I keep saying to utilize the tools, from the provider. And then, that last thing I haven't brought up to date yet, or to the earlier in the presentation, ensuring a separation of duties. And so, just like other things within accounts payable, you don't necessarily want one person, if at all possible, to be getting that central bill or that monthly bill from the card provider. And then that same person would be initiating a payment. They would be setting it up. They'd be approving it. They'd be sending it. You want to split out those duties, much like I'm assuming you're doing with checks and or ACH. So keep that in mind too. There should always be some accountability. I realize many accounts payable departments are small, but you need to have some oversight, some monitoring in place, just to make sure that things are happening as intended. So with that, Sam, I think we are at the last polling question, perhaps. This kind of wraps up what I wanted to convey today about virtual cards. Oh yeah, here we are. And go ahead and answer that last poll, but then I'm open to questions from the audience. I didn't want to get too deep into the weeds on accounts payable accounting entries, not knowing if this audience is working with that directly, but hopefully it gives you some best practice to check against if you're already using virtual cards, or just some things you can maybe enhance or change within your programs. Okay, so Sam, you can close your poll whenever you want to do that. And
I think we're good to go.
Okay.
Awesome.
Well, I wanted to leave enough time for questions. So we did number 4. Oh, okay. And I want to just show my thank you, or my thank you, and my contact information in case people want to also reach out after the event. But do you have questions that have come through? It looks like a couple have, but.
Yes, I can get to those in a quick second if you just want to jump to the next slide.
Okay.
Just want to say thank you so much, Lynn. This was an incredible presentation. I think the audience definitely, learned some great insight on how valuable virtual cards can be for their team. And then also just quickly before we get into the Q&A section, just want to chat about how MHC North Star can also be a valuable asset to your team by empowering them to take ownership of your processes, your documents, and your communications with the simplicity of self-service. MHC North Star will help streamline your AP payment process with an automated accounts payable solution configured to your specific business needs. And finally, we maintain compliance, reduce your AP team's workload to ensure that payments are made accurately and on time. Awesome. So yes, let's jump into that Q&A now. So Question one that we received is typically with CC payments, so credit card payments, there's a fee involved. Who is usually responsible for shouldering the cost? The supplier receiving the payment via credit card or the company paying the supplier?
Well, any supplier that gets set up to accept card payments of any kind, whether they be commercial cards, P cards, virtual cards, or consumer, cards, the supplier is paying a fee related to acceptance. Now, with that being said, I have heard, not greatly, but I have heard that some organizations might say to maybe a strategic supplier that not that they'll pick up the cost of acceptance, but sometimes if that buying organization is earning a rebate for card usage, they might share part of the rebate back to the supplier. Now, again, that's not common, but it's just one aspect that certainly is available to you.
Great, awesome. And next question I'm seeing here is, are we responsible for reporting stale charges to the states like we would with checks?
Oh, like an unclaimed property type of thing, I'm thinking. That I don't want to give the wrong answer on that. I can find out the answer for you and then maybe funnel it through Sam. That I'm not sure. I am familiar with what you are saying. I just don't know if I have the correct answer. And I'm thinking it could vary by state because every state has its own rules, just like every state has its own 1099 reporting rules. That's why I was saying, federal 1099 reporting relief. So Sam, I'm going to get back to you on that so I don't answer something incorrectly. And can I go back to a minute, for the fee question, the other, or maybe you're thinking the person who asked is thinking, well, what is the fee that suppliers are paying? And the fee related to card acceptance from their standpoint, it's not just like one straight, oh, it's 1% or 2%, whatever. It's all different. And there are so many variables that go into the fee a supplier pays. Different card types have different fees. And it could be related to the supplier's industry, that changes the fee. They're usually just as FYI, they're expressed as a percentage plus like a flat, like say 10 cents, 15 cents, flat dollar amount per transaction. But, it's like the card networks, Visa, MasterCard, American Express, they all have different programs, different pricing in place. And in many cases, there are incentives, lower fees associated with virtual card acceptance or, larger dollar amounts than there are, say, for just your regular routine $100 transactions. So that's a whole nother webinar topic, I guess, but I didn't want to mislead anyone by thinking it's just one flat thing. It's all variable, and it also depends on that supplier's relationship with its merchant acquirer, as they're known, related to card acceptance. So had to clarify that before we.
Awesome, thank you. Looks like we have a couple more questions here.
Okay.
If we adopt virtual cards, will we have to give up early pay discounts?
Oh, well, okay. Of course, the answer is maybe, not necessarily. It's one of those things where, again, I work with, all sorts of different end user organizations, in a consulting aspect. And I have had end users say to me that even when they changed a supplier from checks to virtual cards, the supplier continued to offer them the early pay discounts. And, again, a lot of that has to do with if that payment is happening super fast, the supplier might see a lot of benefit in it, even though they are paying a fee. Just it's whatever value they're associating with quick payment, as opposed to so many check payments are lingering out for more than 30 days. So it depends. It could be worth asking. If you are today taking advantage of early pay discounts, maybe the supplier will continue that. If they say no way, well, then you have to evaluate, of course, what's more valuable to you as the buyer, using virtual cards for all the different benefits that we've looked at today, or is the early payment discount of greater benefit? I can say that many organizations might ask this question, Sam, but so many are not taking advantage of early pay today, even when a supplier is offering it. And so some organizations get all concerned, but yet when I say, well, how often do you take advantage today? And they don't have any metrics or data that tells them what their position is or their success rate is. So I also encourage you to look at that.
Great. I believe we have one more. I think we have time for just one more question, but
Okay.
It looks like the question is, which one is better, virtual cards or the straight through payment option you described?
Oh, okay. So straight through payments, I mentioned that at the very beginning as the other flavor, if you will, of electronic payables, e-payables. This isn't, I feel like a politician when I do these things. It's not like one is better than the other. From a supplier standpoint, I mean, for me, well, again, there's pros and cons, but straight through payments is the one where the supplier is not physically having to, charge an account number. And so you could say, well, straight through payments then would be easier for the supplier if they just get their money without having to process a charge. But there's so many suppliers who say, no, we want to see it. They want to touch it, they want to process it. And especially if they've got automation that makes it seamless anyway, that's another consideration. So one's not better than the other. They're very similar in terms of how they work within your organization. If you're the buyer, it's just on the supplier side, are they going to charge an account number or are they just going to get money automatically? But what do they prefer? And it depends on their AR process.
Awesome. We actually, I think we have time for one more.
Okay.
We just got one last question.
Okay.
So what are your thoughts on a supplier collecting and charging the virtual card for partial amounts rather than the entire invoice amount or paid amount?
Yeah, no, that's a really good question. I was talking today, obviously, about how the available balance on a virtual card, can represent, let's just say it represents a batch of invoices. And do you allow the supplier to, maybe we'll just take a couple of those invoice payments, or they just do it in multiple charges? And again, now, if the card is set up to allow that, then that can be just fine. I don't know. I would try. It depends on what is easy or hard for you as the buyer. I mean, if that's what the supplier wants to do and it doesn't create a huge burden for you, well, then maybe allow it, because if that is going to make them happy, more willing to accept your card, fine. But if it becomes real tedious, then that's a problem. So, I mean, to me, the more straightforward you can make it, the better. Like, just allow them to just do the dollar amount that you've authorized all in one fell swoop versus breaking it up into pieces to equal the total. I mean, I would go for simplicity, but you don't know what's going on the supplier side. So I don't know. I mean, yeah, that's a really good question. And I think it's going to depend on, what technology is coming into play and is it creating an extra burden or not? But I would try to keep it as simple as possible personally.
Awesome.
Hopefully that helps.
Awesome. If you just want to click ahead to the next slide here.
Yes. Okay.
Awesome. So yeah, that was the Q&A slide, but that's no worries there. Just want to again say thank you everyone so much for joining us today. A big shout out to Lynn. Thank you a ton for joining us and providing this presentation. You will, so everyone who attended today, you'll be receiving reminders about any upcoming webinars and interesting thought leadership content that we have coming up. Lynn, if you actually want to click to the next slide for me.
Yeah, perfect.
We actually have an upcoming webinar that will include partnership content with Alir discussing ways AP and Treasury should be collaborating. A link will be included in our follow-up email, so be sure to register today. Awesome. Thank you again, everyone, for joining, and thank you so much, Lynn.
Yeah, thank you.
All right. Great. Thanks, everyone. Bye.